But I think the most common three things would be these: data, solutions, infrastructure, and of course, the leveraging of fintech and insurtech.
Today we will open talk with a person who has expertise on research and advisory fields covering banking, insurance, and capital market. Let's join us in welcoming Managing Director for IDC's Global Financial Services and Fintech Practices, คุณ Cyrus Daruwala. Good morning สวัสดีค่ะคุณ Cyrus
สวัสดีครับ
Welcome to Open Talk program under OPEN-TEC Technology Sharing Platform powered by TCC Technology Group. First of all, would you please tell us about your background, past, present role at IDC, and what attracts you in IDC?
Sure. Thank you very much for inviting me to the Tech Talk. I've seen a lot of your videos, very informative. So congratulations to TCC for hosting this knowledge sharing platform. My name is Cyrus Daruwala. I'm the Global Managing Director for Financial Services and IDC. Actually, Kunwalipon, I started as an FX trader. I was in Hong Kong. I moved to banking and banking technology also in Hong Kong. Came back home to Singapore in 99 or 2000 because there was a big gap in the market. There was no unbiased advisor that could help the banks with RFI, RFP vendor selection. So we thought we'll start the company. We started Financial Insights. And I think about 3 years or 4 years later, IDC acquired the company, so we became IDC Financial Insights. And it's been running for 20 years now. So yeah, that's my background. That's what we do.
Oh, interesting.
Yeah.
Kun Cyrus, what's your opinion about the global financial landscape?
Well, I mean, if you had asked me in December, Kunwalipon, it looked a little bit scary in the beginning. December, it looked like 2023 would start on a very high inflation, and we were worried that we may go into recession. Luckily, at the end of January, the world opened up, trade opened up, agriculture opened up, tourism opened up, people started traveling, work started happening. Most of the worker movements globally started taking place. So yes, we are looking at an inflation or a slightly higher than expected inflation in the first quarter of 23, but it doesn't seem to be as scary as before. I suspect by Q3, we will already be at the pre-pandemic level. So growth is looking like it is going to happen. Trade has picked up, financial services has picked up, not just in Asia and in ASEAN, but also in Europe. There's a slow pickup. Unfortunately, as you know, Europe had situation with weather, war, recently the earthquake in Turkey, as well as in Syria. So all of that combined, Asia is growing faster, followed by North America, which is US and Canada, Latin America, and then the last is Europe. So that's how we see the markets shaping up.
Okay, looks like it's a better news than we expected before, right?
Right.
How's the global situation impact to the countries in APEC, especially in Thailand?
Actually, Thailand, I would dare call it lucky, or maybe it's a good design. Thailand, Indonesia, India are the three countries in Asia that have seen a very good growth in the last quarter, especially Thailand. So if you look at agriculture, which is one of the very large growth factors in Thailand, it has picked up. If you look at services, it has picked up. And services includes medical tourism, education, as well as healthcare and tourism, of course, general tourism, that has picked up. Manufacturing has picked up significantly. If you see most of the Korean and the Japanese manufacturing units, they have come either all the way towards Isan and Chiapum, or they have gone towards the Eastern Corridor to support the growth there. And the Eastern Economic Corridor is also another growth story in Rayong, especially. So all in all, Thailand has not just picked up, but I think it has sealed its position in ASEAN and in Asia as a growth story. So it's going to be a good year, a good recovery year for Thailand in 2023 and onwards. That's what I think.
Oh, okay. And how do you see the Thailand performance as compared to other countries?
Well, every time we talk to Bank of Thailand and we have an engagement with them, the only one thing I say is for Thailand to become a truly global player in financial services and talent pool, we need to start education in English. That's the only thing. Thailand has a huge young population. We've been coming to Thailand. I'm practically, living in Thailand most of the times, either up in Isan or down in Phuket. And when we have seen that, and of course, our business has grown significantly, our investments have grown significantly in Thailand. When it comes to talent, out of the 75, 80 million young population, I believe the only thing missing is the ability to start, train, and teach in English. Of course, they are exceptionally good in mathematics and physics. So when it comes to programming, when it comes to gamification, we have a lot of talent in Thailand, but more can be done so that we become a global player in technology, in all of the different services. And for that, we will need to ramp up our standard of English. But other than that, I think Thailand is beautifully self-contained. So banks in Thailand, technology service providers and advisors like yourself, and most of the other institutions don't have a problem hiring Thai talent. But when you want to start becoming regional or global, you will need to embrace the language education as well. So a good start, but more can be done, is what I think.
Okay, so we need more pool of talented with the good English communication skill, right?
ใช่ครับ
คุณ Cyrus คะ what do you see as the top technology trend in 2023-2024?
Okay, I will start specifically from a global perspective, but then zoom into Thailand. Globally, financial services as an industry is going to grow at a marginal growth. And by marginal growth, I mean 3 to 5% growth in lending, 3 to 5% growth in transactions, because we saw a huge digital take-up during the lockdown globally. Everybody moved digital, everybody moved to online transactions, everybody created ecosystems during the lockdown. So digital footprint has increased dramatically, but I think lending is starting to just come back. So it will be slow, much like Thailand, but it will start to accelerate towards Q3 and Q4. So I'm fairly confident by Q4, we will be back again at the pre-pandemic level when it comes to lending, cards, payments, and other transactions, including commercial lending and SME lending. Specifically in Thailand, your growth has been moderate, and I suspect you will see Bank of Thailand doing some more intervention so that they control inflation. They will control inflation by increasing their basis points and interest adjustments. They're doing that so that they can create more liquidity in the market. They're doing that so that they can curb inflation and, cost of living, as we call it. But they're also doing that so that the banks now can do interbank borrowing so that they can free up some capital and start lending more. Bank of Thailand has also done significantly well when you look at BAAC, when you look at Government Savings Bank and a couple of government initiatives to empower SME businesses, to empower startups and startup community, and to empower agriculture, which is still the bread and butter or the foundation of Thailand. And of course, then there is a whole other segment of lending, commercial lending around tourism-related industry. So all in all, I think Thailand has started moderately, but it will start accelerating towards Q3, and we will see at least about a 5% growth. China is also driving growth now in Thailand. The Chinese FDI or foreign direct investment in Thailand has always been quite high, and I suspect it will become even higher. Chinese investments in property, Chinese investments in infrastructure, Chinese investment in port, again, the Eastern Commercial Corridor, ECC, Chinese investments in tourism-related activities. So all of that will spur growth in Thailand, and the banks will again be able to come back to higher lending, higher transactions, and higher profitability by end of 2023.
In the banking, financial, insurance industries, how's the investment trend in technology?
We see a 3 to 5% incremental investments coming into the technology space last year, which was in 2022. In 2023, we have already started experiencing ourselves, and I'm sure you have in TCC, an increased interest in banks coming to advisors like yourself, consulting firms like yourself to say, can you help us with these investments? So 23, I suspect, again, from a figure perspective, there will be an incremental 7 to 10% investments in technology-related activities. Now, let me break it down. It will be in two spaces. One will be in core technology, and core technology is I need to do something in my data center and my disaster recovery center. That could be core technology. I need to sunset my legacy infrastructure and go to a cloud native or a hybrid environment. That is another what we call run the bank type change. And run the bank type change is your business as usual change. Data center, infrastructure, legacy solutions, storage, MIPS, compute, connectivity, and all of that is run the bank. Change the bank initiatives are new. I want to be able to do digital onboarding of customers and eKYC. That is new investment, and that is happening. I want to be able to build a digital ecosystem so that I can walk up to deep, Chiang Mai or Chiang Rai and be able to do transactions even at 7-Eleven or Tesco Lotus. That digital ecosystem build out, that is new. The ability to see everything about a certain customer without the customer going to a bank, whether you are in the movie theater, whether you are at the shopping mall, whether you are in the grocery store, or whether, again, you are in Lotus or 7-Eleven, the ability for these ecosystem partners to service you comes down to data and effective data management of customers. That is new. So there are some old run the bank initiative investments, but there are also equally large change the bank and renew the bank initiatives in digital. And both of these will see a good 8 to 10% growth by the end of the year. That's what I see.
Let me drill down a little bit. Moving forward, which technology that drive financial sector to leapfrog?
Okay. I suspect anything related to data is the center of attention. And by that, I mean the entire data platform creation, extracting various sources of data to standardize it onto one platform, a low-code, no-code platform where you don't need an army of programmers to service that data, to create what we will call analytical inputs, whether it's machine learning or artificial intelligence, onto the data, and then creating various customer touch points through ecosystem. All of that, Khun Walipon, if you see, is centered around data. So I think the number one technology that will leapfrog and give banks or insurance an advantage would be data. Number two would be what we call the ability to sunset all legacy systems and modernize it without doing a rip and replace. What does that mean? The top 5 private banks, not government-owned banks, the top 5 private banks in Thailand and the top 5 insurance lenders are now looking at what they call their core banking or core insurance engines. And what that means is these were great in 1990 and 2000, but now we are in 2023. Let's start depending less on the core and create best of breed solution models. That solution architecture is the second big driver. Best of breed cloud native solutions that can help me with lending, payments, onboarding, customer service, contact, touch point, and everything else that a bank does. And the third would be infra. I think banks have become cleverer. And as I said, Thailand has always been at the forefront. They have started leveraging Fintech and InsurTech in various aspects. You would have seen Bank of Thailand actively promote Fintech and InsurTech. The reason for that is that no more traditional lock-in. Buy the best of breed, pay per use, whether it's infrastructure, storage, compute, or solutions, do a pay per use or transaction base or customer base. So these are the 3 things that I believe Thailand will be focusing on. Of course, different banks are at different maturity, but I think the most common 3 things would be these: data, solutions, infrastructure, and of course, the leveraging of Fintech and InsurTech.
Oh, that's good. Khun Cyrus, what's your opinion about blockchain and digital assets?
Digital currencies have become a main focus for central banks. You would have seen Central Bank of Singapore, which is monetary authority, has floated the idea of Singapore digital currency. The Federal Reserve in the United States has actually launched what they call the digital US dollar. Bank of International Settlements in Europe, which is the central banker's banker, has also accepted that digital currencies would be the norm. My personal view is that blockchain or cryptocurrency, blockchain as a technology is superb and it will keep growing. But cryptocurrencies or bitcoins, I don't think will succeed. Again, that's my personal view because there is governance, risk, and compliance issues behind it. There is verification and validation behind it. There is anti-money laundering and terrorism financing behind it. So there are multiple things that are against bitcoins or what we call cryptocurrencies. But that is different. The underlying blockchain technology that drives smart contracts, real-time verification and validation, cross-border transactions, that is a very, very forward-looking, very important piece of technology that will keep multiplying and growing. And on that, if you see digital currencies, which follows a similar principle where nobody can actually play with the code, but they can all see who owns which digital assets. I think that will pick up significantly. So yes to digital currencies, yes, definitely yes to blockchain, but a big no to cryptocurrencies and bitcoins.
Mhm. Okay. Kun Saras, how should your customer, like financial institutes, justify their investment in technology?
Well, I mean, there's an old saying, Kungwalipon, if you can't scare them, excite them. And that's what I mean. When it goes to the board of directors and your shareholders, there are two ways that the banks can justify. If we don't do this, we will miss out, is one way of scaring the board. Every bank in Thailand is investing in X or Y or Z, and if we don't, we will be left out. That is one way of promoting it to your stakeholders, your CEO, and your board of directors. The other way would be to excite. Why don't we become the first in Thailand to do X or Y or Z? Or if we are the first movers in Thailand, we will be able to get a bigger market share and a bigger wallet share of the customer or the spend. So two ways in which we are helping our clients, and I'm sure you are. One is, again, everybody is doing it, for example, moving to cloud. If you don't, you will become redundant and slower. That is one scare tactic. The other exciting tactic is, why don't we think outside the box and create a new payment platform, for example, or a new data ecosystem, or cross-sell, upsell, looking at exact segment of one. These are all exciting new ventures which bring in incremental revenue. So scare them or excite them is how we help justify to the board and to the shareholders.
Okay. Either scare or excited them, right?
Correct. Two
Okay.
buckets.
Wow, that's interesting.
Yeah.
Kun Saras, your recommendation for the step or framework for how to use technology to help transform business?
Well, I can give you the longer answer, but the shorter answer is talk to TCC and they'll be able to help you understand the technology, implement it, and of course, be a partner. The longer answer would be, let's not get carried away. You go to a conference, a CIO, COOs go to a big forum, they heard a new technology or a new initiative, machine learning, and they're like, we should do machine learning. My request to you is use what is applicable to you. So very simple, start with the building blocks like a Lego. What is it that business wants to focus? Some businesses may want to focus on farmers only, for example, or some may want to focus on creating a digital wallet or a family wallet that wants to go after students all the way to young adults. Different approach. Some may want a traditional CASA account. Same thing in insurance. There are some that are looking purely at motor insurance, some that are looking at general insurance, some that are looking at life and healthcare and critical. Each one of these has a specialty business. Question one, how will you grow your business with minimum effort and maximum returns? Question one, that's a business question. What are the underlying technologies that can help you justify that growth or help you in that growth and show you the return? And three would be very important step. How do you constantly look at what you have and improve on it? Many times, Kungwalipon, what I see is we have just done a transformation. We are okay now for 10 years. It doesn't work that way because it's constantly changing. Next year would be something new and new. So you have to have the ability to depend on your partner so that you're constantly creating a loop. And that loop is, did I do the right investments? Yes. Is it bringing me the right revenue and the returns, ROI or ROE? Yes. Is there something new out there that will help me minimize my effort and cost? Yes. Let's refresh. So that cycle needs to be a framework. And if you follow that framework, your investments will be transparent, small, but your output as well as your return would be much higher. That's what I advocate.
Can I add to your short version a little bit?
Sure. Sure.
So you also may use the research from IDC also, right?
Correct. Absolutely. I mean, we are partners with TCC. We are partners. So how IDC works is very simple. You put your KPIs onto my team. It's as simple as that. So you would say, Cyrus, we are looking at growth in lending, for example. What are some of the best practices in lending? What can we do? And what are the technologies or the underlying technology when it comes to lending? And we can partner with you on that. Or you can say, we are struggling with our old legacy system, and we need to partner with a research or an advisory company like IDC to understand what is available in the market. And then we will come to TCC as the implementation and the rollout partner. So it's an ecosystem where we could work together. But yes, we would be happy to partner with the banks and insurers as we've done for 20 years. So thank you for that, Kunwalipo.
Wonderful. Cyrus, could you please give us the key takeaway that relating to your expertise?
Sure. So my conclusive takeaways would be there is enough clutter in the market. Don't get distracted by the clutter and you must do this and you must do that. Start with the basis and the foundation, as I said. Where do you see your shareholders and your CEO and your board of directors taking your bank or insurance? In which direction? Number two, technology is not a one-off thing. It's a constantly evolving thing. So don't lock yourselves into a very long-term 4-year, 5-year contract. Have what we will call a dynamic framework, which lets you refresh your technology. And C, there are some things that you want to do that the others are doing, but most of the initiatives that you want to do should be very specific to you. So even customer touch points, even digitalizing your processes, all of that needs to be very specific to you. So try not to emulate others, create your own roadmap. And again, it sounds a little bit like a sales, but we can help you individualize your product and then link you up with the right partner like a TCC so that you can do the rollout. So that's my 3 takeaways.
Okay. Cyrus, we enjoy and learn a lot from you. Really appreciate your kind presence in our Open Talk today. สวัสดีค่ะคุณ Cyrus
ขอบคุณมากครับสวัสดีครับ
Also, thank you our Open Talk audience for joining us. If you like us, don't forget to click like and subscribe to TCC Technology Group YouTube channel. See you in our next Open Talk. สวัสดีค่ะ